The next section that we're going to discuss is the accurate reporting of escrow balances. And so in PIC, in the 50058 submission, there's 3 action codes, 7K1, K2, or 17K1, 17K2, and 17K3, that ask PHAs to report information on escrow. 17K1 simply asks for what's the monthly credit for the family, how much is being credited to the account each month. K2 is really getting at what is that balance of the escrow, and 17K3 is what was the amount dispersed accumulative. For enrollment in progress addendums, the FSS monthly credit and balance should represent the credit balance and the credit and the balance as of the FSS effective date for the addendum report. And so now that HUD is requiring that a addendum report be submitted with let's say, an annual reexamination or an interim, the PHA is also being asked not only to fill out those 3 items, but actually to estimate what that amount would be. So the monthly escrow credit would be the credit amount that's going to be effective when that 50058 is effective. So for example, if the current escrow that's being credited is $50, and now in 2 months the escrow credit will be $100, HUD is looking to see that the monthly escrow credit be reported at the $100. Same thing with the escrow balance. You want to take a look and say, what is the current balance, and then when this 50058 record actually becomes effective in the system, what would that balance be? Again, if the 50058 is loaded, let's say a month before, I would have to add another $50 worth of my current credit into that balance. So another way of thinking this is what HUD is trying to determine is, if I look at that escrow balance for that effective date, what should it be? You may also need to estimate an interest accrual, and if there's going to be a withdrawal from that account, from that escrow account, that's a known amount. So when a family graduates or exits the FSS program, what the fields should be filled out to be are the credit balance. The monthly credit would be 0, and that makes sense. The family's out of the program, and therefore they would not be credited with any more escrow each month. K2, the current FSS account balance, should also be reported as 0. It should be reported as 0 even if at the time that the record was put in, there has been a delay for either accounting or reconciling to actually cut the check. But the idea would be that the balance would be a 0 because either that family was dispersed those funds, or those funds, if it was a termination, would have rolled back into the program. Similarly, the amount dispersed would reflect the amount that would have went to the FSS family, even if some of it has not yet been dispersed just because of accounting processing and actually cutting the check itself. When we're looking at a port out situation or a conversion to another program, again, similar thinking, we're looking at the monthly credit should be the credit that becomes effective at the day of the exit. The balance would be at the date that the family was moved out. And then the amount dispersed would probably have no change to it from the standpoint we didn't actually disperse anything. They're still in the program. So it'd be just cumulative as the end of the reporting period. This slide is trying to communicate that a family that's in the FSS program is not treated any differently than a family that is not in the FSS program from a standpoint of when there's changes of the rent become reflective. And so a family will have their rent changed as part of the PHA's ACOP or as in the administrative plan. We're going to switch a little bit here and enter more into the accounting side of the FSS Escrow. And a few years ago, the FSS Coordinator Grant was merged into one program, and the funding can be used to help families, assist families of both the public housing and HGV program. This did not change how the accounting and the reporting for the escrow, though, in any way. The escrow balances still must be paid from either the public housing or HCV program under which the family participates. Meaning, if I'm being assisted by a HCV program, then my funding for escrow comes from HAP. Similarly, if I'm a public housing resident, the money that builds my escrow comes from subsidy and rents. The escrow balance itself should never be reported in the FSS Coordinator Grant. And so the FSS Coordinator Grant specifically is grant funding that's used for salary and benefits of the coordinators. And there's a catalog of federal domestic assistance number 14.896. 18.896, that's wrong. The escrow itself needs to be reported in the HCV program or the public housing program. PHAs must deposit the FSS escrow into a single depository account. So the requirement really is the escrows need to be in a separate bank account. They should not be commingled with other funds that the housing authority manages. There must be a subsidiary ledger. And so what the subsidiary ledger shows is that each family would be in that subsidiary ledger, and there would be transactional data that supports each monthly escrow, any withdrawal, and the interest earned. So that subsidiary ledger would show every transaction that either built that family's escrow balance or if the money was dispersed. Interest income must be credited to the participant's account at least annually. If an escrow balance is forfeited, the funds become program income based on the source of the funds that was initially used to fund the escrow account. So what this simply means is that if I'm an FSS participant and I'm in the HCV program and I have $5,000 in my escrow account and then it becomes forfeited, that money needs to be returned to the HCV program. And specifically, it becomes program income of the money that built the funds. In this case, it would be considered HAP funds, and the PHA would still be able to retain those those fundings, but it would be limited in use to allowable HAP payments. Similarly, if I was a FSS participant in the public housing program and my escrow was terminated, the escrow would become operating subsidy, and therefore it could be used for any purpose that is currently allowed for operating subsidy. HUD has issued in May of 2015 a accounting brief. It was accounting brief number 23 financial reporting for the Family Self-Sufficiency Program. This accounting brief goes through the proper accounting for the FSS Coordinator grant, along with how to properly account for the different the FSS escrows, either as public housing or HCV.